Good afternoon, traders. This is Christian from Hertz Tribeca Trade Group, and this is your end of day recap for Thursday, June 6th. Well, a lot of chop in this market today. I think that's absolutely normal considering the trending day that I talked about in yesterday's video. That trending day yesterday, as I mentioned a couple of times, we don't normally have those big type of trending days. So really nice, and today a little bit of digestion, and of course, I think that there's two reasons for digestion, in the market today, because you could see, for example, the Qs were essentially flat for the day. They didn't do much. Same thing with SPY, same thing with the diamonds. Interesting that the small caps continue to show weakness. I'm going to talk about them in just a second, but yeah, we'll come back to that breadth. But so, that's to me, that's the one reason why there wasn't a lot of movement today. And then number two, we have a jobs report tomorrow. So that could be what some traders are waiting for, to basically give a little bit of, maybe a signal about what the job market is doing. Remember, we had that ADP number earlier in the week, which I don't particularly pay much attention to that ADP report because a lot of times it's not a good signal for what you're going to get on Friday. But the change in non-farm payrolls is a pretty low number. They're only looking for 180 and 165, so they're already kind of hinting at some weakness. The average hourly earnings will be important, as always, because it's one of those gauges of inflation. This comes in point 0.1 or point 0.2 tomorrow, and this number shows an increase, like let's say 200 or 220, and the market will probably like that. Because I think it's all about at this point the inflation and wanting to see, we haven't had any Fed speakers this week, which has been nice because they're in a quiet period, and the market is kind of able to do what it wants to do. Um, but we're going to hear from them on Wednesday, and certainly we heard from a lot of Fed speakers over the last couple of weeks, and the message that they're giving, they're just hammering the point home that they want to see inflation come down further, or see multiple months of inflation starting to roll to the downside. So that number again, I think, will be the most important, but everybody will be talking like, CNBC and so forth will be talking about how many jobs will be created, but I think it's really the average hourly earnings which could provide a signal for tomorrow. All right. So that said, that's kind of what you had here. In terms of outperform, so we mentioned that the small caps. Let's talk about the indices first, and then I'll talk a little bit about. I'll try to keep tonight's video pretty brief, but I think in terms of signals at this point, going back to where we were to start the week, and start the month, we started up like right inside the value area, and we had this downtrend line to contend with. Now, of course, that was a big day yesterday, so now you kind of have to keep the eyes on the road ahead, and how to make decisions here. And I think with the S&P sitting there above the value area, and it's only about a third of a percentage point back down to the top of value, but there's your signal to be long. And if we kind of move back into that value area, then you can kind of, go back to, like, I've been using this pretty much all week long, but I kind of like this analogy. Basically green light above that gray box, above the value area for the month, and maybe yellow light if we roll back into the value area for the month. So, and then there's no guarantee of that, of course, working. It's just giving us a framework to say, hey, I'll be long versus this level, and let's hope that we continue to trend. Qs, you can see that they're still a little bit extended. They're still about 0.8 of a percentage point above the value area for the month of June. So, this could come back and it could kind of shake things out a little bit. And people would probably get a little despondent if because that's how people get with this market. It's very much immediate gratification. So if you could have a little bit of patience, right? I think that you can kind of you're head and shoulders above a lot of market participants right now, who just want, who are trading and basically looking for immediate gratification. We come back down in here, and I think that would be a pretty good place to maybe add some risk, right? Because also this 5 period moving average, we're a little bit extended away from these, right? Doesn't mean that we can't continue to go and get more extended, but I think I think it wouldn't be the worst thing in the world for us to kind of check back a little bit further. Why do I outline these things for you? So that you can kind of rationally think about, hey, what happens if we drop about a 0.5% or 0.75%? Will that actually be decent? Or a place to add? I think it will be. So that's why, it's better to kind of go play some of these scenarios out in your mind while the market's closed and the market's not moving, right? And then you can kind of go, and have a plan, right? It's all about having a plan, and it helps to kind of think things through, like, play, think about chess and planning out a couple moves ahead, right? Than just kind of constantly reacting. Right. So IWM here is the problem child of the indices. Inside day today, right? But man, this is tough. This is a tough chart. So I don't do much here, even though I did put on an overnight trade. I'll explain that in a second. But you're sitting there inside the value area instead of above, and more, right at the bottom of value. So again, it's not where this it's not where the momentum is in this market. And I put this chart out earlier. Let's see if I can, I should have it someplace, but I'll just recreate, I have this on, I think NDX, I think is what I want to reference. But I just, have been noticing for a while now that the small caps are not doing much. So if we go to NDX, and then the Russell. And the reason why I'm using the indices here is so that we can go back in time. But this is breaking out to an all-time high. So again, like I chuckle a little bit because you could look back at the last time. I know that there's these comparisons, and I don't like these comparisons, whether it's compare, like, remember, like a couple years ago, people were comparing, there was this bad guy on Twitter, I won't name his name, but he kept on trying to compare the market to another time frame. Oh, look at the analog between this and 2008. And 2008 happened for a particular reason, right? There was a credit crisis. There was, people were way over levered, the housing market. But anyway, I don't want to go down that road. But it's kind of dumb in my opinion. You could take the important thing is to that history rhymes, right? There are some things that you can take away from past things, right? So okay, so 2008, 2009, once we broke below the 200-day moving average, reduce risk, right? That's the takeaway. It's not to think that the two that this you're not going to compare another time in the market and have it play out to a T. It doesn't work like that. But you could leverage off of some of the things that happened, right, in terms of risk management, such as respecting the trend when it changes and reducing risk. That's it. You don't have to compare this market to 1999 or anything else, but figure out those lessons from that time. And that's mainly just about risk management, right? It's not about making a major prediction, right? So that's the takeaway. It's not to look at analog charts, and that's garbage analysis, in my opinion, because it's not going to play out exactly the same. It never does. Now, there could be some similarities. That's fine. All right, so I'll move on from here, but I just thought that was very interesting because I hadn't gone back and looked at this. But so you've got it. And the other thing, like, one other takeaway that I'll say from this really quick. I try to make today's video short, I guess not. But Stan Druckenmiller, right? He's great to listen to, and he talks about how he made a mistake in like 1999 and he tried to short the market, right? And then after he lost money in that, then he got back on board with the trend, and then he made money with, back in 1999 and 2000, right? And then he saw the writing on the wall, and then he reduced his risk. But overall, even though he lost some money in the beginning, I think, of 1999 trying to short the market, he got back on board because no one knows how long this is going to last for and how long Nvidia is going to go up for. Now, the logical thing is to think about is there's a run up into the stock split, and maybe that we'll see a little bit of profit taking or some of the speculative money kind of come out of that. But in any event, I'll move on from this analysis. I just thought it was kind of interesting to kind of look at some of these things in a day that were pretty choppy. Gold miners, silver miners, those excelled today. Look at retail again. What's kind of interesting is consumer discretionary and what retail has been doing, right? Some people were talking about before that the consumer's not doing well and so on and so forth. Well, you kind of have to look again, right? And here's our sector screener. Which, this is short-term stuff, by the way. I'm looking at the 5-day, 20-day, 50-day moving average, right? These are short-term signals. These are not long-term signals. If you want long-term signals, you basically maybe look at the 50, the 100, and the 200-day moving average. But it gives you a sense of what's going on here. And first of all, so these are all like the major components of the S&P, right? When you add up all these sectors, you'll get 100% what the S&P is. Interesting right now that tech, healthcare, consumer discretionary, you got consumer staples in there too, and REITs are in there too. But let's just talk about these three groups: tech, healthcare, and consumer discretionary. They make up well over, those three sectors make up well over 50% of the S&P. So as long as those are cooking, right, this market's going to go higher, right? If they continue to stay like this strength, that's the situation. Now, it is not all great looking in the market right now. The industrials, which have been for a good number of months, have been a hugely strong area in the market, are showing some weakness. And, we could kind of look at a couple of these charts because, I manage a portfolio called the TTG trend portfolio, and it has about 50 names in various different sectors. But I really have to watch my sector exposure in certain areas because I'm not, 100% long tech. I try to participate where there's strength, but the industrials, and they could come back here. It could be one or two couple of days, but for now, it's below the value area for June and below the 50-day moving average. And if this 50-day moving average starts to curl down and price stays under it, then I think you got to point your eyes down here. But I don't think that's, I would pay attention to last week's lows, and I think that'll be important. And maybe this just chops. Another outcome is that this just chops around. But bottom line, if this is below value and the 50-day moving average, then I'm going to lower my exposure to that. Now, let's look at consumer discretionary, right? And take a look at what's going on here. So interesting that this is starting to tick up again and just regained its 50-day moving average. And look at the day that this had today. Now, of course, this is top heavy a couple names. Number one, Amazon is by far the biggest component of the XLY ETF. And look at that. It finally made this turn here. You've got to have some patience here because I tried this trade right in here and it turned around on me and then it bottomed out. But maybe that's a fault, that's kind of shook me out, probably shook a few other people out too. But nice hammer looking type bar and a move back into the new June value area, and resistance is going to be up at 187.35, bullish 80% rule, right? So if that name goes up, your consumer discretionary is probably going to go up too, that ETF. And then Tesla, which I put on. So here's how I got a question on Twitter the other day. They said, Christian, do you also trade options? I do, but I will use them mostly for just pure speculation, right? So I will trade stocks. I trade stocks 80 or 90% of the time. Those are my trend trades. Those are, following the trend, looking for breakouts, looking for breakouts out of multi-month consolidation, looking for strong earnings names when they test back to their 20-day moving average, right, and start to turn back up, right? I'm trading stock in those situations. But if I want to take a shot at something that's in a downtrend, because Tesla's in a downtrend. I can do that with an option because you could only lose the premium, right? So that's where options really come into play. Now, of course, you could do things like sell premium too with options, but that could be a dangerous game for something that's in a downtrend. All right, but yeah, let's see if that can at least get to the top of the value area. And this price action is really coiled up. Perhaps this has something to do with Elon has this pay vote, I think that's coming next week on the 13th. Maybe you begin to get a break in Tesla around that. So I did mention a call spread, a trade idea. For that in case that does get approved for him. And I think if the pay package gets approved, that's good for Tesla because that means he's vested in the company rather than lower pay and maybe he decides to do something else, right? But in any event, I thought that was interesting. And then we saw this last week. XRT was one of the best performing sectors last week, was up about 5%, right? And look at it, kind of it's doing something different, right? It looks different than that XLI chart or even the XLF chart too, which is kind of just hanging out there around the 50-day moving average without a signal. Another one too that's downtrending right now or just below the 50-day moving average is materials, right? So, notice the lower high here, and possibly another lower high here. So it's really an interesting market when you look at what's powering it. XLV, I think, is still a tough looking chart. But you can kind of look for some, different things that are doing well in here. Obviously Eli Lilly is trending. This is a name that is in the TTG trend portfolio, and that has continued to trend and break out of its value area. Other names, I've been talking a lot about the medical devices. Those have been perking up. ISRG had another good day today. A name that I got long the other day, which is SYK Stryker. Right, I just like the setup here, and I'll be out of this name, but look at how well it's been doing here. But I'll be out of that around that 353 VPOC, right? So that's just a shorter term swing trade. But yeah, another name that I have been looking at for a bit is this TMO. I don't think it's ready yet, but in any event, I think it's good to see more participation in the healthcare group. What else was I going to mention for the day? Just a little bit about strategy. I've been talking a lot about, taking profits in some things. So, for example, I was mentioning that, sorry, just bring up the right thing here. Oh, I don't know what happened with this. I was mentioning like AppLovin, picking up on patterns, right? Here's what AppLovin is doing, right? It's been a little bit frustrating, right? I think that there's a seller in this thing because every time this thing goes up in the morning, it gets hit, right? Like it did this the other day too. It went all the way up to 85 and all the way down to 80. So, right, if you like this name, now if you don't like it, that's fine. You don't trade it. But if you like this name, take the profits in the beginning of the day and then maybe add a little bit. So I did that today. I sold some right around the top of the day, about 87 bucks. And then I added back a little bit. And we'll see if it goes up again, $3 or $4, I'll gladly take a target, put that money in my pocket, and look to kind of look to maybe add or still have that flexibility, right? But that's also how you can kind of make money. And if you're a trader, you want to be making these adjustments from time to time, all right? Because that's what the market is kind of giving us right now. Other than that, a couple other names that were acting well today. All right, was Robinhood, right? So this is a name you had to be a little bit patient with, some consolidation here, but notice what the June value area was telling us that it's just consolidating, right? And again, you had to be a little bit patient with this. And again, when I take targets and trades, I can get a little bit more patient knowing that I've locked in some gains. So I took my last target here in Robinhood, right at this version point of control. And then I'm aiming for this next one up here. Now, I did take another target today in this one. Why? Because if it happens to return back to the top of the value area for the week, then I will be adding again. But ultimately, I'm looking for 24.79 in this one. Also, the semis, which were up 4.9% yesterday. I just can't believe that type of a move. But I thought analog devices did really well today. Right. So you could begin to go through names. Like if you were like me and didn't want to add, when a day like that happens yesterday, I'm trying to take off some exposure. But today I put on a starter in Qualcomm. Now we already have this in the TTG trend portfolio and it's acting well. Now again, it may come back down here and chop around a little bit, but I really like this name. I'm hearing a lot of positive things about Qualcomm. So I started a position in this, a little bit of an inside day today. and you can kind of go from there. Another name that's on people's radar is this GameStop. The options are juiced in this thing. I think that this thing is going to continue to rally into this Roaring Kitty YouTube video, and I think that this thing rallies overnight. So I bought a little bit of this for an overnight trade. I'll be selling it tomorrow morning, but I just think that the hype right now with this market, expecting a video explaining what's going on in this thing, I don't see a reason. There could be, of course, some new information out there, but notice there's a VPOC up there at 49. I'm happy to sell it there too. All right, and so that's it. I'll leave it there. Here's how our watch list is doing this week. Right, I talked about sectors, but we've got a nice bunch of green names in there. And ARM, I did not take that one, but that's actually one of the best names on the watch list. I did take NVIDIA, so I didn't want to double up. You also have a number of other names that are doing particularly well. Meta, which took out a VPOC today. Right. So again, it depends what time frame you're trading on, but if you are, looking for that break higher, notice where this thing kind of chilled out at, right at this VPOC right in here. Right. And there's also one on the 1 hour chart too. Yep, bang, right there. So again, looking to, understanding where there's overhead supply, is in my opinion really good for short-term trading, and knowing where there's some resistance. So again, nice break out of the value area, but yeah, I think taking some off the table is not a bad idea. And Costco, which has been a bellwether in the TTG trend portfolio for some time, really nice. They had monthly sales numbers. Look at this thing trend. I was saying that it was overbought, similar to back in here for earnings, and then you can kind of see what happened after the last earnings quarter. This time around, this thing is not hesitate. Other than the candle in here, test back to the 20-day moving average. How strong has this thing been? All right, guys, that is it for today's recap. Have a great night. See you tomorrow.